Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. It's been a huge couple of days on Wall Street. Microsoft and Meta both delivered blockbuster reports for the quarter, with shares in the two tech giants surging. What's particularly interesting is what it tells us about their investments in AI technology, investments that are starting to pay off. Remember, this is general information only, and you should seek professional advice before making investment decisions. Josh Gilbert is a market analyst at eToro. Josh, welcome back to Fear and Greed.
Great to be back, Sean. How are you?
I'm very well. I'm very happy about this Microsoft result. Tell me about it. What's Microsoft doing to cause its share price to jump so much?
Yeah, huge report. I think it's one of those that it's not just going to deliver good news for, Microsoft. This is going to deliver good news for sort of the broader tech sector. We look at Microsoft as one of the top names really across tech, but importantly across AI. And sort of the standout for Microsoft is its Azure, which is basically its cloud business. They saw 39% growth on a constant currency basis, well ahead of expectations. Really, for us, basically silences any doubts about sort of AI demand. Lots of question marks at the start of the year about how much these companies were spending to grow their sort of AI infrastructure on cloud, data centers, etc. But essentially, that Azure business, basically generated $75 billion US dollars, I should say, in the quarter, which is massive. A huge milestone. 800 million monthly active users as well. So a serious scale signal. Revenue jumped 18%, earnings above expectations. So basically, strength was broad-based across the whole business, even in sort of personal computing, which has been a bit of a weaker segment for Microsoft in recent years.
And is this because Microsoft is forcing people, for want of a better word, to use their cloud solutions because AI, they're introducing AI into all their software products. As a result, you kind of need access to cloud computing. So for Microsoft, at least, it's a virtuous circle.
Yeah, absolutely. I mean, look, their products and their technology, it continues to develop. And it's one of those, right, where we've heard a lot from CEOs from sort of tech giants that you've sort of got to be AI first. And a lot of businesses are sort of now needing to do that. So unless you're sort of taking on these products that, whether it's Amazon, whether it's Microsoft or Google are offering, you're really going to sort of fall behind. So really, from an enterprise perspective, we know that, companies are spending more money than ever. And that is going to, as we can tell, the best in the business is going into Microsoft. Them themselves are obviously pouring billions into data centers, into capacity, AI infrastructure. And it's really justifying that spending with these numbers that we've sort of seen today. As I say, spending big to stay ahead in AI. But really, the key thing for me in this report today, and I think the takeaway for investors, is that it's growing profit very, very fast, faster than its revenue. So that's a sign of a quality business. They're spending a lot of money, but they're monetizing the products at the same time. And that's massive. Monetizing AI was what Wall Street was looking for. And that's what we're getting from these businesses now.
Yeah, I'm trying to think. It was at $330 billion capex annually or something like that. That's just mind-bogglingly big, how you can spend that much money. But obviously investors now think they're they're confident they will get a return on it.
Yeah, absolutely. I mean, look, the capex across all these magnificent seven names are increasing, right? So for Microsoft, looking about 120 billion for the fiscal year 26. If you take into account then Amazon, also 100 billion. So we're probably going to be getting close to almost $500 billion from these magnificent seven names, which is humongous numbers. So what we're seeing is a once in a generation tech shift. That's why they're spending so much money. But AI monetization is sort of really coming to the fore. And I think that's really important because they can justify that spending now. Azure growth is accelerating faster than Wall Street expected. And it just shows that Microsoft is sort of mastering, AI at the moment and really gaining ground on the likes of AWS, who's the leader in sort of cloud at the same time.
Meta, how was its result?
Yeah, Meta's, one that we look at in a slightly different light, maybe not a leader in cloud, but sort of really leading with AI products. If anyone sort of followed the news recently, they probably would have seen they are spending billions of dollars on talent. So they're, sort of buying up the best engineers from around the world, going to Apple, taking their engineers. They're spending a lot of money. Cast our mind back to a couple of years ago, Meta spent a lot of money and it didn't go very well. So there will be a few concerns, a bit of a worry from some investors, I would say. But Same thing again from Meta today, monetizing that AI, revenue up sort of 22%, 47 billion in the quarter, earnings per share well above expectations as well. Essentially where they're delivering on AI, it's basically it's got its core ad business, right? So if we think about the products that it owns Instagram, it owns Facebook, through things like Reels, for example, on Instagram, how they're allowing enterprises to basically target consumers with their ads. It's being driven by AI and how they target and grow that user engagement. So that's meaning that ultimately, companies are spending more money because ad impressions are rising and the average price per ad is also rising at the same time. So that's proof of rising demand, but also pricing power at the same time.
We'll take a quick break, Josh, and be back in a minute. I'm speaking to Josh Gilbert from eToro. After we speak, Josh, we have Apple reporting and Amazon, I think, later in the day. So we're really getting all the tech stocks coming together. Is this, so far what we know, interesting to see where Amazon and Apple come out, but is this kind of proof that the AI revolution is here and a great way to make money?
Yeah, look, I think so. I think the reports we've had from Alphabet so far and Microsoft and even Meta, the important thing is, as we say, is that they're monetizing it, right? For a long time, that was the worry because we were seeing this huge CapEx coming through, billions of dollars, as we said. And there was that worry that we weren't going to see it come through and translate into the bottom lines. But that's exactly what we're seeing. With Apple, I would maybe be slightly more cautious, just because we haven't really had a clear sort of AI strategy from them yet, right? They're a bit more driven by products and obviously iPhones and those types of things, a little bit more affected by the US tariffs as well. So that's something to sort of pay attention to. They're also struggling a little bit, right? Shares are down 16% year to date, while, these other companies are making huge strides in AI. So I think that's disappointed the market a little bit. Obviously, China, they're struggling there with iPhone sales as well. So I think they need a really big quarter here. They need to deliver. They need to give us some, as I say, clearer roadmaps on what they're doing with AI, whether that's features on their device or AI investments. They don't tend to talk about CapEx or investments too much. But that would be something that we want to hear, because ultimately, I think that competitors are racing ahead. So we haven't got a rotten apple. It's certainly not a shiny apple right now, especially when you look at amongst the other sort of members of the Mag 7.
So the Mag 7, so if you take Tesla out and Apple with a question mark, are we kind of at the Mag 5? And this is very much AI / cloud based.
Yeah, I think so. I mean, look, you could probably say that Tesla's coming in there with AI as well, right? We can probably consider it more of a tech company. The reason they're struggling is probably, I would say,
you've been listening to Elon Musk.
Yeah,
Josh.
exactly.
That's what he's been trying to tell us.
You could try and look at Apple and Tesla in the same light. The reason they're struggling is because their core businesses are struggling, right? That's their engine, and they're not making money, but they're sort of trying to sell investors on AI. Yep. But they're not delivering in the same way that everyone else is delivering right now as well. So I think if we look at those big five names, I actually had a conversation with a colleague in the office the other day, and she said, are the Mag 7 still companies we want to own? They're the best now. Are they going to be the best? For me, they are, right? They are spending billions of dollars to stay ahead. You don't always stay at the top forever, but it's really hard to see anybody really challenging these names at the moment. When we think about Nvidia, and all those other names in there, I just can't see anyone getting close right now. And I think those results that we've had from Microsoft and Meta just sort of really resonate that.
And what about Nvidia? It is the biggest company in the world. All the good news from the Microsoft, Meta's, Amazon should actually reflect well on Nvidia, because they make the stuff that these companies use to do their work.
Absolutely. Yeah, it's a read in, right? It's a read into what we can expect from Nvidia. The good news here is that these results are delivering already. We usually kind of look to the end of earnings season for Nvidia. Hopefully it doesn't have to sort of pull out a Hail Mary. And in this sort of instance, it's looking like it probably won't need to. But it's a great sign that Nvidia's numbers are probably going to be pretty good. If Microsoft and Amazon deliver and Alphabet are delivering, then these companies are going to the best in the business, and that is Nvidia. So it's probably going to mean that demand is huge there. We've heard from Jensen Huang in the last quarter that they're really starting to see margin improvements once again. after sort of ramping up its Blackwell chips, which is sort of one of the key chips on the market for AI these days. So it's a great read into what we can expect from NVIDIA, and those numbers from Microsoft particularly, which is a huge client for NVIDIA, really tells us there's probably going to be a pretty decent quarter from NVIDIA. But that also means that expectations are going to grow a little bit in the meantime as well. So
just parking Tesla and Apple, because you mentioned the tariff issue on them. Do any of these other big tech companies get affected much by tariffs?
Not particularly. I think Amazon might be one of the ones that we look at a little bit. Obviously has a huge global base in terms of, that retail division. The retail division is sort of the key revenue driver, but, Amazon Web Services, which is the cloud-based business, that's the profit driver. So that's the one we look to really. So when we're going to be looking at its earnings, we're going to be looking at that growth in AWS, because it delivers about 11.5 billion in operating income, about 40% margin, so far better than what you're going to get from that retail business. So that's probably the one we look at. I think, to be honest, those other names, like say Meta, probably not. Microsoft also. The only thing that would probably affect them is if we see maybe a bit of a slowdown from the consumer. If those tariffs then feed into inflation and a growth slowdown, that would be where I think we see the impact.
Josh, thank you for talking to Fear and Greed.
Thanks for having me.
That was Josh Gilbert, market analyst at eToro. This is the Fear and Greed business interview. Remember, this is general information only, and you should seek professional advice before investing. Join us every morning for the full episode of Fear and Greed, business news you can use. I'm Sean Aylmer. Enjoy your day.